Here are the crypto top headlines covered in this video. Ethereum futures premium drops to 3-month low. Is ETH undervalued? Next, Cardano heats up. Transactions break past 4 million as ecosystem thrives. Also, as crypto drops out of the political discussion for now, lobbyists key in on 3 key areas. Welcome to Crypto Top Headlines, where there's no clickbait thumbnails or titles, and no speeches on my opinions, just bringing crypto's news to you. We are a new channel here on YouTube, and would greatly appreciate it if you would click on the like and subscribe buttons, as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Ethereum futures premium drops to 3-month low. Is ETH undervalued? The ETH futures premium reached its lowest level since November 2023, but historical evidence points to a buying opportunity. Ether investors may be disappointed due to the 12.5% drop in the past 3 weeks, but will a deeper look at the asset's data provide more hope or despair? Part of the recent correction can be attributed to the macroeconomic scenario, with the market no longer anticipating a decrease in interest rates by the United States Federal Reserve by March. Despite this, the Ether futures premium has plunged to the lowest level in 3 months, causing traders to speculate that something else is exerting pressure on ETH's price. Ethereum Dencun upgrade could bring back positive price momentum. The Ethereum network's high gas fees are a constant source of discomfort for traders and investors, and it creates significant pressure to compete with blockchains focused on scalability such as VeChain, Solana, and Avalanche. Despite variations in decentralization across networks, the user experience for Layer 1 solutions is generally more convenient. Therefore, the cost of Ethereum scalability solutions holds great relevance. On February 1st, Ethereum core developer Tim Biko announced that recent Ethereum network upgrade tests have been successful. The Dencun hard fork will introduce proto-danksharding, which aims to reduce the costs of the rollup scalability solutions. Analysts expect the mainnet to activate by March, although no official deadline has been announced by the Ethereum Foundation. To highlight the importance of Layer 2 solutions, the top 4 networks, Arbitrum, Optimism, Manta, and Base, hold a combined $4.2 billion in total value locked, or TVL, surpassing BNB Chain's $3.5 billion in smart contract deposits, according to DeFi Llama. More significantly, in the past week, Ethereum rollups processed 4.2 times more transactions per day relevant to the mainnet, as reported by L2Beat. The appetite for bullish ETH leverage positions has declined. Professional traders favor monthly futures contracts due to the absence of a funding rate. In neutral markets, these instruments trade at a premium of 5% to 10% to account for their extended settlement period. Data reveals that the ETH futures premium has been trending down since January 2nd, but it remained above the 10% threshold until January 23. Interestingly, Ether's price declined by a modest 2.2% between January 2nd and February 2nd, even though it peaked at $2,715 on January 12th due to the FOMO from the spot Bitcoin exchange-traded fund launch. In essence, the current neutral 7% premium on ETH futures can be attributed to exaggerated price expectations in the cryptocurrency markets. As a point of comparison, the last time Ether's futures hit 7% was on November 4th, 2023, when the ETH price was $1,860. Moreover, historical data shows 110 days of trading below the $1,900 resistance, justifying the lack of confidence back then. However, those had the courage to place bullish bets in November 2023 saw Ether's price rally 21.5% from $1,850 to $2,250 within 30 days. Therefore, the lack of excitement in leverage longs does not necessarily imply an impending negative price swing. Ether option markets reflect a lack of clarity regarding ETH price. To exclude externalities that might have solely impacted the Ether futures, one should analyze options markets. The 25% delta skew can assess whether the rejection at $2,600 on January 11th has made investors less optimistic. In short, if traders expect a drop in Ether's price, the skew metric will rise above 7%, while periods of excitement typically have a negative 7% skew. Notice how the Ether options skew flirted with the bullish negative 7% threshold on January 31st, but quickly reverted back to the neutral level. In fact, the last time the ETH 25% delta skew held a bullish range for longer than 24 hours was on December 4th, 2023, after Ether's price had rallied from $1,560 to $2,250 in 7 weeks. Consequently, the present neutral options indicator reflects a lack of clarity rather than a distrust in Ether's price potential. Ether bulls have their eyes set on the potential approval of a spot Ether ETF. On January 24th, the U.S. Securities and Exchange Commission delayed its decision on BlackRock's proposal. Bloomberg ETF analyst Eric Balchunas expects a final decision from the SEC by May 23rd, placing approval odds at 70%. Given this catalyst and historical examples, the decline in Ether's futures premium to 7% should not be interpreted as an indication of bearishness. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Cardano heats up. Transactions break past 4 million as ecosystem thrives. Cardano, a blockchain platform known for its research-oriented strategy and eco-friendly proof-of-stake consensus, is experiencing substantial growth. Increased transaction volumes, a variety of project launches, and active development within its ecosystem underline this expansion. Cardano transaction boom. December and January saw Cardano process over 4 million transactions, showcasing a significant increase in on-chain activity. This growth aligns with the platform's ambition to become a scalable and sustainable blockchain for real-world applications. The blockchain platform isn't just processing transactions. It's attracting developers and projects. 8 new projects launched on Cardano in the past 2 months, and an additional 17 are currently under development. This brings the total to 157 already launched and 1,320 in progress, indicating a thriving and diverse ecosystem. Technology on the move. Cardano's technological advancements are fueling its growth. The number of token policies on the platform surged, leading to the minting of 480,000 new native tokens. Additionally, Plutus scripts, enabling smart contracts on Cardano, saw substantial growth, with both V1 and V2 scripts experiencing significant increases. Project Catalyst, Cardano's community-driven funding initiative, is fostering engagement and innovation. In its second week of voting for Fund 11, nearly 5,000 wallets cast over 150,000 votes across 920 proposals seeking community funding. This active participation highlights the strong community backing for Cardano's development. ADA price on the rise. Reflecting the overall positive sentiment, Cardano's native token, ADA, experienced a price increase of 1.3% in the last 24 hours and 7.4% in the past week. While the report paints a positive picture, it's crucial to acknowledge the broader context Cardano faces competition from established players like Ethereum and emerging blockchains. Regulatory uncertainty surrounding cryptocurrencies remain a factor, and while touted as energy efficient, Cardano's environmental impact compared to other blockchains is still under debate. Cardano's eco-friendly footprint. Charles Hoskinson created Cardano as a peer-reviewed blockchain, but what sets it apart is the Ouroboros proof-of-stake system. Compared to Bitcoin, Cardano can confirm transactions with a far smaller environmental impact thanks to its energy-efficient methodology. According to CExplore, Cardano's annual energy consumption is a meager 2.602 GWh. It is therefore around 214,672 times more energy efficient than Bitcoin. Cardano's proof-of-stake system is scalable, flexible, and adaptable, making it a viable option for investors who are worried about how their cryptocurrency holdings may affect the environment. Overall, Cardano's recent growth momentum suggests a promising future for the platform. However, navigating the competitive landscape, evolving regulations, and sustainability concerns will be key to securing its long-term success. Our next top headline: as crypto drops out of the political discussion for now, lobbyists key in on three key areas. Crypto is taking a backseat to concerns about social media and AI, and the crypto lobby is using the opportunity to focus on pending legislation around market structure, stablecoins, and illicit finance. Last year at this time, cryptocurrency was on many politicians' minds as they sought to grapple with the collapse of FTX, jostling with each other to be the loudest advocates for preventing such collapses in the future. FTX's co-founder and CEO, Sam Bankman-Fried, had gone from being a crypto political poster boy to its pariah. Fast forward to 1 year later, and crypto has largely dropped out of the public spotlight, save for the long-awaited approval of a spot Bitcoin ETF. Presidential candidates such as Vivek Ramaswamy and Florida Governor Ron DeSantis have officially dropped out of the presidential race, and with them almost all mentions of cryptocurrency. While the SEC continues to bring actions against a number of players in the crypto ecosystem, including 124 respondents in 2023, in the larger political discourse, crypto has taken a backseat to things such as AI and children's safety on social media. To the lobbying and advocacy groups that are still trying to move legislation around digital assets forward, however, that may not be such a negative turn of events. Having crypto fall to the background when everyone's sights are turned to AI, I think it's a good thing, said Cody Carbone, Chief Policy Officer at the industry group Chamber of Digital Commerce. Taking a phrase from all these builders and developers of the ecosystem during the bear market, now it's time for us to build. Now's the time for us to actually get in there and educate. Unchained spoke with three groups to better understand how the crypto lobbying industry, which spent almost $19 million in the first 3 quarters of 2023, is approaching the coming year with an election around the corner. 3 areas of focus were echoed among these groups: the hope to advance legislation around market structure as well as around stablecoins, and to do something to address illicit finance, which has drawn the ire of lawmakers. The FIT Act. A major focus of industry groups has been on passing the Financial Innovation and Technology for the 21st Century Act, or FIT Act, which would provide a regulatory framework for digital assets with the Commodity Futures Trading Commission, or CFTC, overseeing these assets as commodities if they are in fact decentralized. The bill classifies decentralization in a few different ways. These include no one having unilateral authority to control the blockchain or its usage, and no issuer or affiliated person having control of 20% or more of the digital asset or the voting power of the digital asset. According to Carbone, the FIT Act would not just cover decentralized assets. The CFTC would receive spot market jurisdiction over all assets that don't fit the Howey test, which determines if a transaction should be regulated under securities regulations and so would fall under the SEC. But additionally, this bill gives specific jurisdiction to the CFTC over decentralized assets. If we can get the FIT Act or a stablecoin bill done this year, that would be a huge step forward, said Kristen Smith, the CEO of the Blockchain Association, another industry group. Stablecoins. Stablecoin legislation was also targeted as a key focus by Quincy Enoch, co-chair of the Economic Policy Practice Group at lobbying firm Invariant. The latest legislation would empower the U.S. Federal Reserve to write requirements for issuing stablecoins, including having sufficient one-to-one backed reserves. The bill also hopes to clarify that stablecoins aren't securities or commodities and therefore don't fall under the jurisdiction of the SEC or CFTC. And while state regulators could approve state-issued stablecoins, they could hand over their supervision to the Federal Reserve. I think both sides of the aisle would like to see something done to build out that framework so you can build a regulatory perimeter where you can have good actors inside that perimeter, and it becomes much easier to identify the bad actors and the people that don't want to comply, said Enoch. Illicit finance. Doing something to address illicit finance is seen as a top priority by politicians. Senator Elizabeth Warren has been vocal in her concerns about crypto's use in illicit finance, for example, proposing the Digital Asset Anti-Money Laundering Act in July of 2023, before gaining 11 co-sponsors later that year. The bill would extend Bank Secrecy Act requirements, which include reporting and holding personal details, and extending Know Your Customer mandates to crypto actors such as miners and wallet providers. The crypto industry is extremely wary of the specifics of Warren's bill, however. It would just completely cripple the innovation and the integrity of this industry, said Carbone. And so we agree that we need to do something on illicit finance. There is consensus across the industry right now that if there is any amount of digital assets being used by terrorist groups, by money launderers, or by rogue nations, we want to combat that as much as possible to protect consumers and investors. Supporters of crypto have argued that the perception of crypto's role in illicit finance is less than what Warren claims. But there is a consensus among lawmakers that something will need to be done to address issues of illicit finance, even if it doesn't look like Warren's bill, said Enoch. Election year challenges. But doing anything during an election year when political posturing can take priority over productivity is a challenge, which Carbone, a former staffer on Capitol Hill, recognized will impact all of these debates. I've been in D.C. for a while, and it is an election year, said Carbone. Moving legislation is super hard, and so we may be capped at getting a vote on the House floor, like that might be the win for those bills this year, and that's fine. That's because passage on the House floor, even if it's not considered in the Senate, is a win for the industry because those bills will have momentum going into next Congress, according to Carbone. Smith likened the current advocacy and lobbying apparatus in previous years to building a plane as it was flying. This year, though, the plane is finally built. If you look comprehensively at the crypto industry and the broader community, I think we have finally sometime in 2023 reached the point of being a mature advocacy effort where all of the pieces are in place, said Smith. The coming months will tell if those pieces are part of an actual puzzle that can come together and move the industry forward. So this concludes our top headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons, as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.